There'll always be a reason to be optimistic, but it is a volatile time of year, and you do usually see very big swings in June.
Hey, welcome to Hedge Heads, where we discuss the commodity markets, hedging, and anything related to trading futures. Remember, the risk of loss in trading commodity interests can be substantial. These are opinions only and not trading advice. Well, no one knows where the market's going. We're not afraid to share some ideas. I'm Ryan Tunkseth. He's John Prishman.
Well, John, you were gone last week on a little trip to Mille Lacs. You want to share any fishing stories before we talk about the markets?
I've heard of the great bite at Mille Lacs, and it lived up to that and then some. Yes, it was what they would call a red-hot bite. Even my friend, who has very little talent, although he thinks he has a lot of talent, was catching them left and right, and that's always an excellent gauge. If he's setting the hook and he's busy catching fish, you know the bite is as good as it gets.
I have fished with said friend, and I would agree.
Yep.
If he's catching fish, it must have been really hot.
Excellent gauge. Yeah, so it was fun. A lot of smallmouth and a lot of walleyes.
Yeah, well, that's awesome.
Yep.
The smallmouth bite there is really good, actually.
Yeah, a lot of bass boats. They take it very serious there.
Probably the hardest fish to catch is the bass. So it's
yeah, very, very picky fish. Very hard to catch the bass.
Yeah, I can see why those guys. You had a little run-in, didn't you, with the bass guy?
They don't like you anywhere near their boats for some reason. I'm in the camp that the bass probably like to camp under your boats. They're so dumb. They like the shadow probably more than like walleyes scoot away from it. I think bass probably like it like a dock. It probably help them. But yeah, they take it very serious, and they cast about 400 feet. So if you're within 400 feet of their boat, they get very upset. And they spend a great deal on them to chase around the world's dumbest fish, which I'm sure is going to get me in trouble.
Sure. Yeah. John Prishman, and the email address is hedgeheadspod at gmail.com. If you're a bass fisherman, you can send your comments in here.
I love how they change lures all the time like it matters.
I guess in my experience, both of us as walleye fishermen, we catch plenty of bass by accident, and you rarely catch a walleye by accident.
Yeah, that's exactly right.
Yeah, but catching bass is fun, that's for sure.
Yeah, they fight. They're big smallmouth there too.
Yeah. Catching a big smallie is a good time. I will say that. I don't know, it seems a waste of time to go target them in my case. So, yes, Ryan at hedgeheadpods.com.
And I don't have anybody to share with. The farmers are generally more ice fishermen because for obvious reasons. It's hard to be a fisherman when you're busy in the summer. And boy, are these guys busy. The phones are quiet. You can tell the weather opened up, and they're planting what they have to plant in Minnesota. It's going in the hard way here.
Yeah, it's definitely been a spring, although we have a smaller report this week. I don't know if you want to talk much about that one. Does this report this week really mean anything, or it's all about the end of the month?
You kind of close the chapter on the old crop. It just, people care less and less every day in June. Like, it can matter, and there can be very explosive rallies, like in the old crop stuff. Do I expect that this year? No. There isn't. You hear things like, the basis is way stronger than it normally would be, so there's no corn out there. You hear these stories in any given year, and it just never – does it ever really amount to anything where there's this mega short squeeze at the end? Not really. Soybeans are the one market that's capable of that. There's not been good enough demand for any of that to happen. Brazilian premiums have come up, so we're competitive at least. So we could see, maybe some tightening in the old crop stuff. Corn's running ahead. Ethanol, I think they fixed that last time though a little bit by raising ethanol usage and exports. But there isn't anything that's really out of line that you would expect huge changes at all. Might be supportive. Anything that is supportive is going to be seen as really supportive because it's been a really bearish market. So it'll overreact, I would think, to the upside if there's anything even neutral supportive. I think that'll be a positive. But no, it's the end of the month. That's the big one. That's the one that moves the market. That's all the mystery. You have the intended acres in March. Then the June is more of what's going in for real. And it tends to really move the markets. A lot more negative than positive. Last year, beans were very bullish after that report because of the ultra low acres. And then corn was very bearish because of the very high acres at 94. So you saw two different things happen last year. Beans were bullish and corn bearish. That's not very common. Generally, it's just kind of disappointing across the board. Beans usually are the leader in the bearish category where there's more bearish surprises. And the way the weather laid out this year, it's going to be really tough to tell what the numbers are going to be. I'm going to guess the trade's going to think the 90 million acres is going to be hard to be above that in corn. And then there's probably some more bean acres. They might not be right. Or then we had 6 million acres missing in the March report altogether, year over year acreage, so they could show up. It tends to be exceedingly volatile. And there's a lot of different option strategies that are really nice for that report to use. And we can talk maybe next episode a little bit about what some of the different options are, because it tends to be a very surprise report. So things like strangle straddles can work real good, where you don't need to know the direction, you just know volatility is coming. But I expect, this is actually very quiet for this time of year. This time last year, we were just ramping up on that dry weather, and then it really accelerated in about a week and a half from now. We're just not seeing any of that at all. You look at the crop conditions, what were they? 74% good to excellent, the best since 2018. And here's where a lot of disagreement happens. People argue over the crop ratings like they're going to change anything. You had lower crop ratings last year, but it was a tricky year last year because of how dry it was. The crop ratings, I think, were 59%, so a lot lower last year, but then we ended up with a record yield. So there's a lot of people saying, why even have the crop ratings? And that's a valid argument. It doesn't seem to correlate super high to the yield, or it hasn't in the past. But you never know. I mean, it's going to be, for now, they say it's a good crop. It's a good crop. And that's where the emotional argument comes in. You go on Twitter, you go on Facebook, you surf enough, you're going to find what you want to find. Hey, I drove from there to there, and I can tell you it's not going to be 181. Every year this happens. It never fails that somebody drove from somewhere to somewhere, and they discovered that it's not out there, and wait till the market figures this out. You just hear this talk every year. I mean, it's actually exhausting. You're going to have good spots. You're going to have bad spots. You're going to have slow starts that fields aren't even planted. You're going to see everything this time of year. Let a little heat come. That's in the forecast. See where we are in a week and a half from now, and all these road trips that happen that shows a devastated crop, and you just already know it can't be 181. It's every year this talk happens. Every single year.
Well, we got to come up with some bull cases out here, but when you do look at the numbers, planting progress, back to right in line. We had a week where we were behind. I know there's guys locally that had to replant. I know there's some of that.
It's been rough around here.
There's some shifted acres, but it's your backyard versus national numbers, right?
Mm-hmm.
That we're budgeting on. And so good, excellent, like you said, above average, best in a long time ratings for both corn and soybeans.
Yep.
It's hard to look at the numbers and find the bull case. Although, I don't know if you looked at the cash corn index. I think that was up today significantly over. I don't know why that was. I didn't research that before coming on the podcast, so I shouldn't have brought it up.
Yeah, but you're going to have regional hotspots, and as you do every year, and you're going to have some spots where there's a lot of ethanol demand from ethanol plants, and they're going to be desperate for corn this time of year. If you look hard enough, you're going to find what you want to find on the bullish side, and you're certainly going to find that easily on the bearish side. Pretty typical this time of year. We came in last year with very low carry-ins, for corn and soybeans, virtually nothing for beans, and 1.6 billion, I think, for corn. And then we had very poor weather for a long time, and now we have huge carryovers, and we're going into a lot better weather. And somehow people want to spin that as bullish. I don't know how they can, but that's what's happening in the news. But it is pretty typical this time of year where you can't prove or disprove much of what's being said on either side. So there's people that really fill those gaps in and tell a lot of tall tales, or a lot of feelings go into their reports of what they saw. But I think in 2 weeks from now, after some heat, I think you'll get a better read of what this crop looks like, instead of trying to figure out what it's going to yield at the very beginning of June. But we do go through this every year. If it seems like I'm exhausted, I am. It just never changes. It never ever changes. You can count on the drought talk. I'm sure that's going to start pretty soon.
Yep.
There'll always be a reason to be optimistic, but it is a volatile time of year, and you do usually see very big swings in June.
Well, and I had a client ask me last week, why are you always so bearish? And I'm not, number one, but we have talked the bear case pretty much every episode we've been on here, and part of that is we are the hedge heads. We're looking at it from a hedging perspective, which if we feel like it's going up, or there's a total bull case, why would you hedge here, right?
Yep.
And so that is the viewpoint, that we need to consider those sides. That side. So what are you seeing? I mean, I know you cruise the Facebook forums, you look at Twitter and kind of gauge what other people are saying. What are you seeing is the bull case out there? Can you make a bull case?
Corn is the one where if it is 90 million acres or less, and we have the demand we have, that you could argue doesn't need to go a lot lower than this already, and then so that's the bull case, but there's a lot of ifs, ands, or buts there to make that. And I've fallen in this trap many times in the past, where if it's instead of 181 and it's 175, it's going to be so tight, it's going to be unbelievable. The old rope-a-dope, I call it. What if it's that? What if it's that? The seed and the technology has gotten better and better, and you saw that last year. 177 looked like a devastated crop midsummer. The rains came in July, but it wasn't a significant amount that saved everything. It was like, is it going to be all right? And in the end, it was a record. So to say we couldn't get 181 this time of year is pretty ridiculous, and there's a lot of those guys on Twitter already. There's a lot of predictions of way under 2 billion bushel carryover. People make a lot of noise this time of year. I go off the USDA's numbers. I know that's not going to be popular because everyone thinks they're wrong, but you're going to have to, if you want to be anywhere near where the funds are going to be or anybody else, you're going to have to follow the numbers a little bit. You can't ignore them. These are bad numbers. They're bad world numbers. I'm at the world ending stocks are near record levels for corn and beans. And then you're always going to get the pushback, well, that doesn't exist, China's lying, all this. And it's just, it seems like you're swimming upstream all the time when you do that. And then you'll get your 2019 and 20, maybe be rewarded. But they're so few and far between. So how do I solve all that nonsense? For me personally, in order to not run into another 1920, is if the USDA says it's bearish, but there's really good demand, I think that overrides the bearishness short term, and you put your bull horns on. The demand is what clears the commercial pipelines out. That's where storage comes in, and you're gonna have to pay me this to get it out of storage. So, but if you don't see that, you got to go off the USDA's numbers. In 2020, when China was buying every day, and they said we had 3 billion bushel carryover. If you went off the demand at that point, you at those low prices, you might not have run into trouble. So that's kind of my filter after 2020, is if the demand's running red hot, even with bearish numbers, those tend to be markets that have a good chance at rallying, even if, like I say, the USDA says it's there. Also, you want to watch national basis. When that's rising, especially at harvest or shortly after harvest, that happened the 2 years previous. They kept saying we had all this corn around after 19. It was a horrible year. Everyone knew we didn't, but it didn't show up for a year and a half. So in order to avoid saying the USDA's numbers are wrong and just always fighting that and avoid that problem, just go with the numbers. And then if you see that demand ramp up, maybe make some more bullish strategies. That would be my advice.
So that's pretty solid as far as what could happen bullishly on the bullish side, and it has happened the last 2 years that it's been fairly bullish coming into this time of year. What what's the bear case this year? I mean, I know we've covered
South American
pieces of
production. I mean, it's just overwhelming, and they've had serious issues there down there this year, and they still have way too much. And they got a lot of room to expand, and that is going to be a story that everybody's talking about for years. Is that South American production continuing to ramp up? They have plans for ever more expansion next year in corn and beans. And then you had Argentina, who was out of business last year on their drought. They're in business this year, so whatever shortfalls we had in Brazil, Argentina is going to take care of, no problem. And then we didn't have a very good soy meal market last year, and that's with Argentina completely out. So we're going to have much more competition on the soy meal eventually. Even in the short term, though, it might be bullish. So I see that as being a problem. But just this competition from the world at cheaper prices is really what's gonna be the huge headwinds. We want to go to higher prices for higher inflation, because the higher inputs and it costs the more to produce it. But at the same time, we have to remain competitive, and we've kind of not done that for a couple of years. Corn's finally fallen to a level where we are competitive, where beans look like they're still priced out of the market. China bought a little this morning, but so that's going to be the problem, is competing with these world prices, and the production keeps ramping up. We're not seeing any cuts, and we're seeing supplies building. So it looks a lot like we're headed into the bear territory. But we do have this volatile time period with weather, and we don't know what our production is. So for hedging, in my mind, the next 4 weeks are everything for a hedger. Like, it's going to decide your fate, this weather, in the next 4 weeks. August, you can make an argument for beans, but it's going to be important. It's not clear right now, so that's what you're talking about. It's not exactly clear in corn. Beans got a tough road ahead of them, but that's the only question mark. I did start taking some corn hedges off today. I do plan on putting March stuff on, but I kind of wound some of that back that was profitable, and I want to see what the next 2 weeks hold for sure.
That makes sense. So if I'm a producer, especially maybe heavy on beans, and are you talking long term? Like, are you having guys look at hedging out in 25 and 26 too? If you think it's long term, are there prices there to get hedged out there? Or
you'll get guys that do that. If you got a large carry in the market that can work for you. If it's inverted in the front, like November 24 is over November 25 beans, it doesn't make a lot of sense to me. But if you don't know the spreads and you don't know how all this works, then maybe yes, it would make sense. But for me, I tend to concentrate on the upfront a little more aggressively, and with options. You can't really do that with futures. You can't sell 24 and say that's your 25 crop, because it doesn't always work out that way. But you can with options. That's something where if 24 falls, it's going to fall probably 60, 70 cents more than 25. So you're going to pick up additional money there in 24 on options than you would in 25. But that's kind of a more advanced conversation. It really depends on the producer. Obviously, you should hedge the crop year that you're hedging. But again, there's things you can do in options that are a little more, gives you a little more leeway. There's you'll see it on Twitter all the time. If your broker's telling you to hedge, your crop in a different crop year, get a different broker. You see all that stuff, and it's very true, especially for someone initially starting out. Like, you want to avoid that pitfall. But you also want to pick out the right time of year. Like, now let's go with corn. So 24 is 12 cents under 25, I think. So 25 is more expensive than 24. Now in July, that would be correct. Yes, that's where 25 might see the highest price that you're going to see. So it really depends on the time of year. But earlier, like late winter into spring, that's not a very good idea. So you got to know your time periods. But yes, July, that may be something that you're looking at depending on the weather, hedging out another year. Yep.
That makes sense. And being aware of those things, and that's why it's nice to have a broker who's been in the business for a long time to know those months, know when it does make sense.
Yeah, that's exactly what we do here. It's like, this is a smarter hedge at this time of year, and then lay out the options that guys can do. Like, you can do this, this, and this. This is what normally happens this time of year, and you can use that. But that's what we do. You don't need to know that. You just need to understand the conversation and then choose what strategy suits your needs. That's what I would do. You're busy farming and producing, and that's why you would have a guy like us to help you along with those windows.
Yeah, I think there's we spent almost a whole episode on it, but when you have a plan like that, that takes the emotion out of those. Like, you know why you're hedging, where and when, and you also know your entry and exit and plan.
Yep.
You don't want to be saying the tractor fretting over why you did something, right?
Yeah, that's where I found the most successful hedge programs are with plans. Not that you shouldn't adjust it. Like, I adjusted our corn stuff today, but we still have a plan for that. If it does this, we're going to do this. If it does that, we're going to do this. You want to have a plan. That's really, like you say, it takes the emotion out of it. That's where I see people have very good success. Not trying to get the high, averaging in a good price on the way up, and then, have a good average price. So when it falls, you're doing well right away. And just having those orders in, having a plan and sticking with it, but still at this point being very flexible. And then in 2 weeks, not being flexible. It's a tricky window that you have to deal with. Last year was a great example of how that works. You saw like a lot of pessimism, and then all of a sudden it started getting dry. It went nuts. It went to 640, I think, in a week and a half. Accelerated to 640, and like, snap your fingers, that was gone. And it was right back to where it started from within, 2 weeks. Those are tough gears to switch, but still, if those orders are in, and there was some guys, they were very happy. I meant because those orders were in, or they called the right day. So even though you're busy this time of year, that's the curse of it. As busy as you are, it's the most important time to be coming up with these plans. Even if it's only for a minute that you get to talk to, it can make a huge impact. But what I'm finding this year is a lot of disengagement, a lot of confusion. I think that a lot of the analysts and just general information is confusing people. It's overwhelming. You'll hear one guy will pick up the phone and he'll have heard from his cousin or a Twitter or whatever, this, and this is happening. That's why I think corn's going to 7. Next guy is going to be totally grounded in reality. Field looked bad last week. Talking to a bunch of guys, it's looking good with 2.2 billion bushel carryover. What are we doing in corn? It's very different than it's been in the past. Because people are like, I would say, like politics. They're just subscribing simply to the things that they want to hear, and they're not even seeing the other viewpoint anymore. I had not seen that in commodities before, but I definitely am now. So if you want to be bullish, you can find 10 guys and 10 different reasons, like we talked about baseball statistics almost, where because of this, and this, that means it can't be 181. Like, you can change any number into any number you want with statistics and just the way it's worked in the past. But it's very misleading, and I think that's happening to a lot of people. So you're getting a lot of confusion, I'm finding, and these aren't actually very confusing numbers at all. That's why I find it fascinating this is happening. Guys are just getting information overload. They're reading what they want to read, and then because they're getting conflicting information, sort of hearing that sometimes, they don't know what to do, and they're just simply doing nothing, is what I'm gathering.
I'm seeing a lot right now of a lot of the focus is on the short term and not thinking about what that long term might be. And that's where they're getting disengaged a little bit, and it can kind of, pull away, and kind of pull those thoughts away.
And a lot of worrying on where like, yeah, it's just, what is the weather going to do? And, where like, how am I going to pay if corn, they don't even want to think corn can go to $4. Like, how am I going to pay my bill? So it's easier to walk away and say, hey, everybody's wrong, and then see what happens. It could be a surprise. So that's why it feels like with a lot of people, just general confusion. I don't even know what I'm going to do if it gets to these prices. And it's just easier not to think about it. So the disengagement, that would explain why it's happening. And that can happen from a bull market transitioning to a bear market. Just like, it's hard to go back to prices you don't want to go to, so you fight it every inch of the way. But then once it's there, what gets interesting is then everybody wants information. Once the damage is done, in how do we fix this? So it's a cycle I've seen a number of times. This one's been really stubborn. Like, we have really bad numbers, and nobody wants to acknowledge that these are bad numbers. For some reason they just are like, something's going to happen where it won't be bad. You don't want to lose hope. You want to be optimistic on prices, but it's definitely different than I've seen it in the past. And we're going into a time period where it can fall very quickly, but on the other side, it can go up very quickly. So I give everybody a pass because I don't know the weather. It still could go up quite a bit. And we saw that last year, and surprising things can happen, but the window's not very big. In 4 weeks, we're going to know a lot of information on this crop. And I hope guys can switch gears that fast.
Makes sense. And especially from a producer perspective, you don't want to be bearish. And bear markets aren't fun. Bull markets are way more fun.
Yeah.
Bear markets, way easier to trade too.
Yeah. So. And I find guys that embrace both types of markets do very well. And the guys that are permanently bullish really struggle. There's just a couple different builds of people. Some people they go with the flow. They're kind of contrarian even. Those guys do a lot better than the guys that are just permanently bullish. It just doesn't work. More often than not, commodities fall. They don't go up. If they get into a cycle where they're up, everybody makes money and everybody's happy. So it's kind of just a sign of the times. So, you have cryptocurrencies, everything. Everybody's just used to all these markets going higher. Why does my market have to go down? Why? Everything else is going higher. So it's sign of the times too with what's been going on in the outside markets where you just haven't seen large corrections or scary corrections. I got a young intern here that's coming in here. He hasn't even seen a market downturn in the stock market. And he's 18, 19 years old. So it tells you how long it's been in the outside markets to see a significant correction. We finally saw the bonds come off the lows. But we haven't seen the big market shakeups where you're worried about losing your job. You're worried about it, worried about money. But it seems like we're cycling into that. Commodities cycle into that all the time. So it's easy for us, up and down because it happens all the time. But it's going to be rough when the actual outside markets come down because they've been up for so long. You want to be optimistic, but commodities fall. They fall a lot easier than they go up. And guys that know that and trade that way and hedge that way do a lot better.
Makes sense. Well, why don't you tell people how to get a hold of you so they can reach out if they have questions?
Any questions, just give me a call at 218-731-1578.
Thanks, John.
Thanks. If it seems like I'm exhausted, I am. It just never changes. It never, ever changes.